As the month comes to close in July, we at CrispIdea have analyzed how this month went on multiple different fronts. We want to go into detail, especially on three different parameters. Number one is the macroeconomic picture, where we want to discuss everything from monsoon to West Asia war to crude oil prices to inflation. Also, we will talk about high frequency indicators, which will probably provide us with a picture of how the economy is doing. So that's one part that we would want to discuss. The second part we want to discuss is the policy action, both from Fed in the US as well as the expected action from RBI in the upcoming meeting in the month of August. And last but not the least is earnings season is in full swing at this point in time. Lots of companies in India have already declared the results, and many companies in the US have done the same as well, although US is ahead of India. So we'll talk about the earnings season as well. So these are the three main topics that we'll cover in this particular update for the month of July 2026. So let's get going. Let's start with the macroeconomic picture. And as we all know, July and August are the peak monsoon months for India, and it impacts Indian economy more than any other parameter that affects the macroeconomic picture. So monsoon, as we all know, in June was extremely deficient. We were short by almost 40% compared to our long-term average. It was one of the driest months that India had seen since 1901. But in the month of July, we picked up pace. The monsoon progressed and has covered pretty much the entire country. And the deficiency, if you were to look at from June to July end, has now narrowed down to only 16%. And July, in fact, we have exceeded our long-term average target numbers as well. Now, monsoon is one part, but the other part which impacts the entire functioning of the Indian economy is how the sowing of crops actually happens during the month of July and August. And one of the important parameters that we track as well is how farmers are sowing different crops, and these are all kharif crops. So these are the crops ranging from legumes to pulses to oilseed to cotton and even sugarcane. And fortunately, the farmers were very pessimistic at the beginning of the year. They have picked up pace right now in terms of sowing, and so the gap relative to our long-term average on the sowing different pulses and different legumes and oilseeds and cotton have actually narrowed down quite significantly. In fact, we are quite ahead on sugarcane as one of the crops that farmers are growing. But the major impact of all of this will show up in the month of August, which is when the actual grain formation happens under the further monsoon progress that also happens in that particular month. So overall, on the sowing side, again, things have gotten relatively much better than what it was, let's say, in the beginning of July. Now, having talked about these two parameters, we want to talk about the third parameter, which is the crude oil prices. And we all know that the West Asia war is still continuing. The crude oil prices have averaged around $85 for the entire month of July, and which is a respite relative to the peaks that we had seen earlier, which had crossed almost $100 earlier, and right now it has come down to $85. But these are still higher than $70 that we witnessed after the signing of MOU between US and Iran. So what is happening on the West Asia war, as we all know, is while the Strait of Hormuz is still choked, another front has opened up, which is Bab al-Mandeb, which is the Red Sea route, through which Saudi Arabia is transporting a lot of crude oil to India and countries like South Korea and Japan. And that is also now Houthis are attacking that particular region as well, especially they've attacked multiple tankers in that particular region as well. So now we are fighting on the energy supply, we are fighting two fronts, not only the Strait of Hormuz, but the Red Sea route as well. But fortunately, the crude oil prices are still below $85. And as long as it remains around that region, I think India is relatively okay. If it crosses $100, then again, we will run into multiple issues relating to current account deficit and energy supply, as well as the inflation spiraling into the Indian economy. But at this point in time, the $85 is where it stands right now, and which is a level which is relatively manageable. Now, because the crude oil prices were elevated for the entire earlier quarter, right from April, May, and June, what we have seen is Indian economy is definitely slowing down. So when we look at multiple high frequency indicators, such as, let's say, car sales, van sales, passenger vehicle sales, commercial vehicle sales, they have slowed down from 30% year-on-year growth now to 15%. The growth is still there, but the slowdown in the growth which has happened on that particular count. We are also seeing the CPI inflation increasing. So CPI inflation, which was in the month of May, was only 3.9%, whereas in the month of June, it has now peaked up to about 4.4%. And we all know that RBI is comfortable if the inflation stays below 4%. But right now, it is now crossing into the comfort zone of RBI. And if it crosses 6%, then RBI will definitely have more definitive policy action that they will take. So inflation is slowly inching up there as well. If you look at few other parameters to look at how the macroeconomic scenario is performing, so one of the other parameter that we look at is the tractor sales, and the tractor sales again have slowed down from 19% year-on-year growth to about 12% in the month of July, and but it is still growing, but there is definitely a slowdown over there. If you look at rail freight, then the rail freight numbers have actually inched up. And the core sector, by the way, has also picked up the pace as well. So both the rail freight moved up to 4% year on year, and the core sector also saw growth of about 5% in the month of July. Now, the last important parameter that we also look at is air passenger traffic numbers, and there is a significant slowdown. So air passenger traffic was about 9.5% in the earlier month, which is now slowed down to negative 1%, which is clearly showing a sign of stress, especially in the urban consumer space. So that overall we are seeing some amount of slowdown, but Indian economy is still fairly resilient, at least at this point in time, if we were to look at all the parameters combined together. Now, we will, of course, switch gears onto the policy action, because ultimately all of this macroeconomic scenario will lead to a policy action by the central bank. So let's talk about the RBI first. So as I mentioned, the RBI policy meeting is there in the first week of August, which is just few days away from now. And as I mentioned, RBI probably will start being a little uncomfortable with the inflation inching up higher. Fortunately, Fed Reserve actually held their interest rates in the FOMC meeting, which happened just a few days back. And as a result of which, potentially RBI may also decide to hold the interest rates. But definitely, RBI is in a slightly uncomfortable position as we speak at this point in time. One great news which has happened during all this turmoil that we have seen in this last couple of months is the RBI policy action when it comes to attracting foreign currency deposits from NRIs. They launched an FCNR scheme where they are allowing NRI investors to put in fixed deposits at 6.5% in US dollar terms, as well as offering them the taxation breaks. And that has been a very positive move by RBI. RBI has already collected more than $32 billion through NRIs putting in money in deposits in India. And this window is going to be open until September end. So we expect another $30 to $40 billion collection by RBI, which is definitely going to help our forex reserve. So our forex reserve position is definitely improving as a result of this policy move. So this move has been extremely positive. So that is as far as the policy action is concerned. Now, all of this ultimately tails into the earnings, because what really matters for any investor is how corporate earnings are showing up, both in India as well as in the US. So let's talk about both those markets in particular. This is still work in progress as we speak. Out of 6,000 odd companies in India, only about 1,000 companies have reported their earnings. In US, of course, a significant, much higher percentage of companies have already reported the earnings for the quarter ending June. So we have a much better picture in US. So let's start with US first. So US, again, we were expecting about 23.8% to 24% year-on-year earnings growth in this quarter. But again, US continues to be on a tear. They have delivered about 39.7% year-on-year earnings growth. And this is still being driven by AI and mega cap technology names. So multiple companies like Microsoft, Meta, Google, all of them have announced their results, and the results have been fabulous. So in fact, if you look at Alphabet's results, they've been amazing. You look at the cloud business growth is growing at more than 50% plus. If you look at their YouTube business is growing at 24% plus. You look at brilliant results coming in from Microsoft, Meta. I mean, all of them have been positively surprised on the results. I think, however, one factor is playing an important role over here, which is amount of capital expenditure that all these companies are having. And all these companies are still saying that we are going to increase the capital expenditure even further. So Google just announced that they are going to have additional billions of dollars being spent on top of the already high capex number, which was running in hundreds of billions of dollars. So they are also going to spend more capital expenditure, and that has spooked the markets. Google has, for example, declined more than 18% from their all-time high. Meta has corrected roughly 35-40% again from their all-time high. So that is a parameter which is definitely spooking the markets in the US, because no one knows at what point in time some of these companies will actually blink and stop their capital expenditure. And increasingly, this capital expenditure is not financed from free cash flows. So if you really look at Meta, their free cash flows are dwindling right now, and now they will have to potentially tap into increasingly the debt side of the business to be able to fund their capital expenditure. So that's what's happening on the US side, but overall the earnings growth has been phenomenal. India, fortunately, has shown a great amount of resilience in this quarter. There were doom stories being put out that because of the higher crude oil prices, it will definitely be a quarter where Indian companies will show negative earnings growth, and this will be one of the worst quarters that companies will be able to demonstrate. Fortunately, the average earnings growth is, or rather, median earnings growth is over 17 odd percent. The revenue growth is close to about 10%, and which again shows the resiliency of all the different Indian companies. If we were to break it down by different sectors, banks have delivered a good amount of results. Technology has been a comeback sector in some sense because of the fears of anthropic AI. People were fearing that the IT services companies' margins will get compressed and they will have a decline in their overall profitability as well as on the revenue side, which fortunately has not happened to the extent that it was predicted, as a result of which we have seen stocks like TCS, Wipro, Infosys, all of them starting to bounce from the bottom that it made a few weeks back. So IT services is making a little bit of a comeback. We don't know how much of this is sustainable and what kind of growth that they will be able to deliver over the coming few quarters, but at least in the short term, they've delivered good results. And there are good results coming in from infrastructure companies. There are good results coming in from even consumer good companies. So overall, Indian companies have been able to manage their profitability quite well, and which again shows that the underlying economy is fairly resilient. So net overall, if you were to just summarize the month of July, there were multiple headwinds for Indian economy, ranging from West Asia war to inflation to monsoon to potentially prediction of poor earning season. Fortunately, this month has turned out much better relative to the low expectations that we had, and as a result of which we are seeing the stocks starting to move up as well. A lot of stuff is yet to play out. So monsoon is not yet done yet. August is a definitive month. We have RBI policy meeting just ahead of us in the next week. The earnings season is still not over, so there are more than 5,000 companies yet to deliver their earnings in the month of August. So we'll have to see how each of those parameters will play out. But the underlying negative, pessimistic tone which was set earlier in the month is potentially now on the sidelines. And now we can potentially try to build on a little more cautious optimism on the back of the results and the resilience that we are seeing at this point in time. So that's all from an update from CrispIdea for the month of July. Please stay tuned. We will obviously talk about how the month of August goes as well, because there's a lot to happen in that particular month. And we'll also be doing a detailed earnings summary review sometime in the third week of August, when most of the companies would have delivered their results, to tell you which sectors did amazingly well and which sectors were laggards. So keep watching CrispIdea. Thanks for your attention.